Hello guys, and welcome to another educational video. My name is Styliana. I'm the head of investments and market research at Pure, and in today's video we're going to talk about 3 things you need to do in a crypto bear market. I think this video is going to help you a lot in these hard times. Before we start, I have to make sure that you already know that this is not financial advice. We create high quality information videos, but only for educational purposes. It's not easy to hold your nerve as crypto assets print double-digit losses, but don't bury your head in the sand. Follow these simple steps and make the most of this bear market opportunity. So, what should you do instead? First, buy the crypto dip using dollar cost averaging. It's all too easy to be in the wrong side of a crypto trade when markets turn wildly volatile, but that doesn't mean you have to sit there and watch your portfolio plummet by the hour. Investors who have held back a reserve of fiat currency or stable coins or have expendable capital in their bank accounts will have the ability to buy the dip. This common phrase used throughout the crypto industry refers to the practice of buying an amount of cryptocurrency whenever there's a significant bearish correction in the market. The idea is, if and when prices return back to their previous highs, the dip buyers will bank a nice profit. This echoes the infamous preaching of stock trading legend Warren Buffett, who once said, "When there's blood on the streets, you buy." While buying the dip can be done in a single trade, the most recommended strategy is to implement something called dollar cost averaging. This involves breaking up your reserve funds into smaller tranches and making several trades over time. Doing this will typically garner much better results than if you had invested all your capital in a single trade, unless of course you were lucky enough to go all in at the perfect time. Second thing you can do is to diversify your investments across different crypto assets. Just like it's nearly impossible to accurately predict the bottom of a bear market, it is also impossible to know exactly which of the 17,000 plus cryptocurrencies will recover the faster or go on to rally the highest. One way to hedge your bets is to use dollar cost averaging for a range of different crypto assets. This might involve reducing your trade sizes even smaller, but in doing so, you will reduce your overall risk. Of course, it's not enough to randomly select crypto assets and invest in them. You will want to perform rigorous due diligence first on each crypto asset you intend to buy and look for the following. First, previous all-time high. No crypto is guaranteed to return to its all-time high, but it can give you an idea of what sort of potential the asset has. Also, you can look at past performance. Look at the asset's price history using tools like TradingView and see how well it has recovered during previous crashes. Does it correlate strongly with the rest of the market, or does it regularly outperform out-leading assets? Previous performance is no guarantee of future price activity, but again, it gives you a rough idea of what might be possible. Additionally, upcoming roadmap announcements. One thing that can assist in an asset's recovery is the arrival of a major update or roadmap development. This can include things like a rebranding, a mainnet launch, or a new partnership. Last but not least, don't freak out. It might seem like a no-brainer, but managing your emotions during bear market is not as easy as it sounds. In fact, it's often described as being the hardest thing to master when learning how to trade professionally. Renowned American economist Benjamin Graham once said, "Individuals who cannot master their emotions are ill-suited to profit from the investment process." An important step is to recognize that fear and greed are powerful motivators that can often lead to making snap judgments and that end in losing trades. Having a concrete plan in mind before placing a trade can make all the difference between making a profit or losing money. Taking profit is another seemingly easy but incredibly difficult thing to master. Greed can often keep you in a trade beyond your take profit level in the hope of the asset will rise even higher in price. This increases the risk of the trade moving against you, especially if you don't set stop losses. The crypto market is incredibly volatile, and while you might be frustrated if you missed out on the opportunity to buy the dip this time, another crypto crash is likely on the horizon. Make sure you take profits, ensure you keep some capital in reserve for crashes, and remember to keep your cool when the bear moves in. That's all for today, guys. That's all the things you have to do during a bear market. So if you have any questions or if you want to open a trading account with us, you can contact us through our website or our social media. We'll be more than happy to help you. Thank you for watching and wishing you a profitable trading week.